Hello, I want to talk briefly through accounting for inventory if you're a product-based business. And this relates to a small business. When we have inventory that is purchased, you're holding that inventory and then eventually you're selling that inventory. So there are a couple ways that we can initially account for the inventory, and then an adjustment has to be made either quarterly or at year end, ideally quarterly. An adjustment has to be made to true up the difference between whether it's cost of goods sold or inventory. So let me talk through that a little bit more. And again, there are two options for how we account for it. So I'm over here on a balance sheet and we have an inventory set up on the balance sheet. One way for small businesses to account for their inventory is as they're making inventory purchases, it goes into the inventory account. So all of it, any inventory you purchase goes into the inventory account. And then at the quarter end, you can either take a listing of every item you've sold, assign a cost to it. So that's cost of goods sold. And then we can make an adjusting entry. So then we would take out any of those items that were sold out of inventory and record them to cost of goods sold, which then shows up on the profit and loss. That's one way to do it. The other way is to record all of the inventory purchases directly into cost of goods sold. And then we do an adjustment at quarter end where we could do a physical inventory account, or again, look at what was actually sold in that period. And then we can adjust cost of goods sold and inventory accordingly. So we would be moving some of the cost of goods sold items, which probably weren't sold, over to the inventory asset. So this gets a little bit complicated, and this is something that is best handled by an accountant, but I just wanted you to have the understanding of the basic concepts. So again, basically you can either record your purchases into the inventory account directly, and then you'll adjust that at quarter end, making an adjustment between inventory and cost of goods sold, or you record everything in cost of goods sold and you adjust it the other way. So it's kind of up to you how you want to see that. I personally like putting everything into inventory and then making an adjustment and recording cost of goods sold each quarter. That's the way I typically set it up for my small business product clients. But again, it's up to you how you want to do it. You need to make sure that someone can make a journal entry for you to adjust inventory and cost of goods sold at every quarter. And that needs to be somebody that has an accounting background. So just, remember to be tracking inventory and cost of goods sold the best way that works for your business. So again, you can do physical counts, or you can be keeping track of every item that you sell and assigning a cost to it. But just important that you stay on top of that and make sure you're adjusting quarterly so you can get more real-time data.